What is going on, investors? Hopefully you guys are having a great day out there, probably a lot better if you don't have FSLY Incorporated shares, ticker symbol FSLY. That is because this stock was down 2% during the regular session and down, just 16.8% at the current moment in the after hours. This after reporting disappointing Q1 results and also a CFO that is transitioning out of the job after 5 years of service. They don't have a replacement yet, which typically kind of gives the signal to the markets that maybe his departure was kind of sudden. So it gets investors a little nervous when the chief financial officer could potentially have suddenly left the company. Now, tell you what, if you own this stock for a long time, you've been very well rewarded over the last year, up just 169%. But year to date, this thing's been taking a beating, down 32%. We'll get over to the numbers here in a second. We'll talk about broadly why this stock is trading lower in the after hours. We have a $6.8 billion market cap. This one has healthy short interest, okay? 21%, okay, short interest on this one. So when we get over to these financials, I want you, even if you're long FSLY, you love this company, whatever it is, well, I want you to see also what the short sellers are seeing, because there's a lot of short interest in this stock, which means some very, very sophisticated investors are looking at these financials and they do not like what they see. Now, speaking of not liking what I'm seeing, get over the stock chart, and this thing is looking pretty bad, honestly. So we'll talk about that here in a minute. Now, I think the revenue, we'll talk about the revenue, the profit, that type of thing, but more broadly is this downside guidance. So Q2 guidance came in at $84 to $87 million in revenue. The consensus was for $91 million. So that's actually quite a big drop just in Q2. Now, the full year is coming in line with consensus. They're looking from 380 to 390, consensus is at 381, and the loss per share comes in at 16 cents to 19 cents. That's for Q2. The consensus was only for an 8-cent loss. So losses are accelerating over at FSLY. When we get over the numbers, you'll see why. Now, we've got the 3 months ended here. 2020 is on the right-hand side. 2021 is on the left-hand side. Our revenue coming in strong. Look at this, up from 63 million up to 84.9 million. This is really a fast acceleration. I think that's roughly a 30% growth, maybe even a little higher than that. Now, cost of revenue, you'd expect this to tick up as well. So we've got our gross profit. Last year, we were sitting at 35.7 million. Now we're sitting at $47.4 million. Really, really strong revenue growth and gross profit growth over the last 3 months. Now, guess what else is growing? Take a look at these operating expenses. We've got R&D, we got sales and marketing, and we got general and administrative. Boom. These things have absolutely blown up. We went from 47 million up to just 97 million. That's $50 million more on the operating expense side. So you guessed it. We take this $47.4 million revenue, we minus 97, and boom, we lost 49. We'll just call that $50 million from operations just over the last 3 months. You see here, last year we lost, I want to say only, but compared to 50 million, losing only 12 million in the previous year is certainly looking a lot better. Now, not the full story. They got these little footnotes. What does that mean? You come down here to stock-based compensation, okay? So these expenses, not necessarily all cash. It's not FSLY pulling out their wallet or the CFO pulling out his wallet, pulling out dollar bills or Bitcoin or Dogecoin or whatever it is and giving it to employees. Guess what they're giving them? Shares of this company. And, ooh, man, when the shares of the company are down considerably year to date, will the employees be really super excited about that? I don't know, but here's broadly what I want to show you is cost of revenue. This includes stock-based compensation expenses followed. So about $30.8 million of these expenses are stock-based compensation. But here's what I want to show you. Okay, for 3 months ended here, we still lost 49, we'll call it $50 million. If you want to, which I think is a big mistake, but if you want to give them credit for this whole 30 million, well, look, They still lost $20 million, even if you factor in stock-based compensation. Look, they've got to pay their employees one way or another. This has been a battle on Wall Street for ages, okay? Me personally, I count stock-based compensation as cash because last time I looked, Fastly has offices in really expensive parts of the country, okay? The workers are not going to work for free. Okay, they're either going to want dollars, Bitcoin, crypto, or shares of the company, or a mix of it all. And so here, this is why I don't discount this. The companies can do this if they want to. Me personally, I don't. And I think short sellers are looking at as well. Now, what has also been levered up is this balance sheet. So we see here, the beginning of the year, December of 31st, they've got cash and cash equivalents of about $190 million. You see here now in the most recent quarter, boom, gigantic blow up. This thing's over $1 billion. So these total current assets, look, went from $261 million up to $1.17 billion. Big blow up of the asset side. Well, where'd that come from? Basically long-term debt, which we'll see in a moment was basically a convertible note. So they issued this debt. Most of that, it appears, or all of it actually, flowed up into the cash of the company, which is probably good considering this company is losing money very, very rapidly on a quarterly basis. And their guidance appears that they're going to continue to lose money, not only this quarter, but for the full year as well. Now, cash flows give you a better sense of what's going on with the company. In my opinion, it'll give you a sense of how financially, well run the actual business operation is. Okay, we get to add back in this massive $30.8 million worth of stock-based compensation. We pull down this net loss. We get to add back in depreciation, amortization, all that type of stuff. Well, we come down here to net cash used in operating activities. Spoiler alert, it's still really disappointing, honestly. Okay, you went from $7.1 million up to $10.8 million. So losses are accelerating. While revenues do continue to accelerate, the losses are mounting on this as well. And not only that, you got this convertible note cost as well. These types of things tend to be dilutive to shareholders. And guess who loves dilution? These short sellers, because they know the more shares that are out there on the market, the more can be sold and the more the stock price can continue to be driven downward. Now, speaking of downward, this stock has been on a downtrend, okay? And broadly, here's the deal, is we look at stocks like this and we don't always see the setups. I talk about, when we look at the stock chart of a company, sometimes I talk about if this happens, if this happens, if this happens. It's a lot of if, thans, or ors. In this case, the stock broke this key level, okay? You see this key level was at $62 per share. That's about where the stock was today. It had held this level since November. It had held 62, rocketed all the way up to 120, came all the way down to 62 and bounced here like a little basketball, and then boom, fell through the hoop, and now we stopped here at 47. When you have these key levels, in my opinion, taken out, does it create a buying opportunity? I think that's the question a lot of people are asking themselves right now. Is Fastly a buy the dip opportunity? I think when we look at the financials, in my opinion, probably not, because this is a company, while their revenue is growing rather rapidly, their profitability is absolutely being destroyed. And you certainly could get, I don't want to necessarily name other companies, but I think you can think of the other companies off the top of your head that reported earnings, say, last week, that are growing as fast or faster than a company like Fastly. And their profitability is absolutely amazing. In fact, most of those stocks, or some of those stocks, are paying dividends, and most of them are buying back the stock as well. Me personally would rather be focused on companies like that. Now, here's the deal, though. Is Fastly a buy the dip opportunity? This thing has fallen off a cliff, and now we're sitting right here about $48 per share. Right, I put a big old long line in here. I don't want you to think that 48 is a level of support for Fastly. I just drew this line in here so you can see how much this stock has fallen. And here we are. Here's our price action that's supporting these, at least in the shorter term. I tell you what, the level where I see FSLY going to, and this is unfortunate for anybody that's holding these shares, there's support down here at $25 per share. That's another roughly 50% lower than even where the shares are trading now. Would I expect this stock to get there tomorrow or the next day? No, I wouldn't. Definitely would not expect that. But we've got heavy short interest. $6.8 billion market cap. Tell you what, that's pretty richly valued, but if you shave 50% off of it, you get down to a $24, $25 price target, and then, you're trading at about $3 billion valuation. All of a sudden, the numbers look a little bit better at that level, but all things being considered, there is not a lot of support for these shares right here at 48. So I would not, me personally, I would not look at this as a buy the dip opportunity. This is a put on the watch list opportunity. This is wait and see what happens. Can we find some footing here at 48, consolidate a little bit? Because guess what? On the way back up, this $64, $65 level, this stock's going to hit its head on this level, okay? And it's likely not going to be able to burst back through that. And if the momentum of this stock remains how it has been over the last few months, which is down and down heavily, okay, this stock in February was 119. It fell all the way to 65, and now here it is at 48, okay? The momentum on this stock has completely dried up. So that's why I put a level down here at 24.25. This is where the stock consolidated sideways really for like a year, almost 2 years. That is personally where I would buy the dip on this one. Now, does it have to be 25? Can you step it up here to 34, which is only about $14 where the stock is? Yeah, maybe you start nibbling down in this range, but I do not consider this a nibble opportunity. Too often, investors can get burned on this big drop because they see it as an opportunity to buy a stock that can snap back quickly. Don't necessarily see that being the case. And certainly if the CFO thought these shares were going to snap back and go up, why would he quit? Okay. Why would he, leave the job? Okay. So FSLY, interesting company, interesting business. I know we didn't really talk about it here on the channel, but we're more about the numbers, the financials, the fundamentals. You can dive into their fundamental product. We'll see what happens with this one. Let me know down in the comments what you think, if you're going to be buying the dip or selling any kind of rip that you see with FSLY over the next coming weeks and days ahead. We'll be back with more videos very soon. Good luck with your investments.